Nvidia's earnings report exceeded expectations, yet the stock tumbled, triggering a broader tech sell-off. What happened? This breakdown explores the factors behind the market's reaction and why AI stocks are suddenly under pressure. Nvidia delivered yet another impressive earnings report, with both revenue and profit exceeding Wall Street's expectations. Normally, such strong results would send a stock soaring, but instead of celebrating, investors reacted in the opposite way, dumping shares and triggering a sharp sell-off in tech stocks. Nvidia's stock tumbled 8.5%, pulling down the entire sector with it. The Nasdaq Composite plunged 2.8%, marking its worst one-day drop in a month. The S&P 500 shed 1.6%, and the Dow Jones Industrial Average slipped 0.5%. The sudden decline left many wondering, if Nvidia is doing so well, why is the market so shaken? A big part of the answer comes down to expectations. Nvidia has been the undisputed leader of the AI boom, with its advanced chips powering everything from cloud computing to artificial intelligence research. Because of this, investors have come to expect not just strong earnings, but near-flawless performance. Morgan Stanley analysts noted that Nvidia is priced for perfection, meaning that even the smallest sign of uncertainty can lead to a wave of selling. While Nvidia did report record-breaking demand for its new Blackwell chips, some investors were likely hoping for an even more aggressive growth forecast. When that didn't happen, traders rushed to take profits, leading to a steep drop in the stock. But this sell-off wasn't just about Nvidia. The entire semiconductor sector felt the impact, with several major chip stocks falling sharply. Supermicro Computer, a company that plays a key role in Nvidia's AI supply chain, took the hardest hit, plummeting 16%. When a sector leader like Nvidia stumbles, it often sends ripples across the industry, as investors worry that other companies might also struggle to keep up with demand. Beyond the chip makers, the sell-off extended to companies that have benefited from AI-driven energy consumption. This suggests that the market may be reassessing whether AI-related growth can continue at the same breakneck speed. Another factor weighing on the market was the latest announcement from President Donald Trump. On the same day as Nvidia's earnings report, Trump confirmed that tariffs on imports from Mexico and Canada would take effect on March 4th, with additional tariffs targeting Chinese goods. These trade policies have raised concerns about inflation, supply chain disruptions, and the overall health of the global economy. Higher costs for raw materials and components could squeeze profit margins, making it harder for companies, especially those in the tech sector, to maintain their impressive growth. All these factors combine to create the perfect storm for Nvidia and the broader tech market. While analysts still see long-term potential for AI stocks, this sell-off serves as a reminder that even the strongest companies are not immune to market volatility. Investors will now be watching closely to see if this is just a temporary dip or the start of a larger correction in the AI-driven tech rally. Investors fear that higher costs could eat into their earnings and slow down their growth. At the same time, concerns about interest rates added to market uncertainty. The yield on the 10-year Treasury bond rose to 4.27%, signaling worries about the Federal Reserve's next move. Investors are closely watching inflation data set to be released on Friday, which will influence the Fed's decision on rate cuts. If inflation remains high, the Fed might delay cutting interest rates. This would make borrowing more expensive, potentially slowing down investment in AI and tech infrastructure. Since companies like Nvidia thrive in a low-interest rate environment, the fear of prolonged tight monetary policy made investors even more cautious, contributing to the tech stock sell-off. Bitcoin was another surprising victim of the market's turmoil. The world's largest cryptocurrency took a hit, falling from a high of $87,000 to around $84,400. As a result, MicroStrategy, a company that holds a massive amount of Bitcoin, saw its stock plummet 9%. This suggests that investors may be pulling back from riskier assets like cryptocurrencies as uncertainty spreads through the financial markets. When big tech stocks fall and economic fears rise, many traders shift their money into safer investments, leading to declines in more volatile assets like Bitcoin. Despite the sell-off, analysts remain optimistic about Nvidia's long-term future. Bank of America raised its price target for Nvidia to $200 from $190, calling it a top pick on AI dominance. Analysts at Wedbush also maintained their confidence, noting that Nvidia's earnings had few, if any, blemishes. The company's revenue from its Blackwell AI chips reached $11 billion this quarter, its fastest product rollout ever. Jefferies analysts pointed out that Nvidia's supply chain is continuing to improve, meaning there's no sign that demand for its chips is slowing down. These bullish takes indicate that, while Nvidia's stock dropped in the short term, many experts still believe the company is in a strong position for long-term growth. One major event that could turn things around for Nvidia is its upcoming GPU Technology Conference in March. CEO Jensen Huang has already hinted that exciting things are coming, likely referring to advancements beyond the Blackwell chip architecture. Investors will be closely watching for announcements about new products, AI breakthroughs, or future growth plans. If Nvidia delivers major news at the conference, it could reignite optimism and potentially drive the stock back up. Meanwhile, the broader tech sector is facing its own set of challenges. Salesforce saw its stock drop by 4% after missing earnings expectations and providing a disappointing outlook. The S&P 500 has dropped 3%, while the Dow Jones Industrial Average has slipped 2.9%. What makes this reversal even more shocking is that just a week ago, the market was hitting all-time highs. Investors had been feeling confident about AI stocks, corporate earnings, and economic stability, but in just a few days, that confidence quickly turned into caution. The coming weeks will be crucial for Nvidia and the tech sector. Will Nvidia's upcoming conference restore investor optimism? Or will economic fears continue to weigh down the market? The answer could determine whether this sell-off is just a temporary dip or the start of a bigger shift in the AI stock boom. So, where does this leave tech investors? Was Thursday's sell-off just a temporary shakeout, or is it the start of a deeper correction? Some traders may see this as a buying opportunity, betting that AI's long-term growth trajectory remains intact. Others may remain cautious, wary of macroeconomic risks and a potential slowdown in AI-related spending. Ultimately, the next few weeks will be crucial. The Fed's inflation data, Nvidia's March conference, and corporate earnings reports will all play a role in shaping market sentiment. One thing is clear. In a market driven by high expectations, even the best results can lead to a sell-off if investors sense the slightest hint of uncertainty. In conclusion, Nvidia's earnings were undeniably strong, yet the stock fell sharply, triggering a broader tech sell-off. The combination of sky-high expectations, new tariffs, and economic uncertainty created the perfect storm for market volatility. While analysts remain optimistic about Nvidia's long-term prospects, short-term fears are driving traders to take profits. The coming weeks will be pivotal in determining whether this was a temporary dip or a sign of bigger challenges ahead. What do you think? Is this just a short-term correction, or is there a deeper problem with tech stocks? Drop a comment below, and let's discuss. Also, don't forget to like and subscribe for more updates on market trends, AI stocks, and economic news. Stay tuned for the next deep dive.
And remember to be uniquely you.